So a lot of people on my live today was asking me how I caught these EU and GU shorts. It did provide about 15 RR between the entries and the re-entries, so was a lovely move. Relied quite heavily on the volume profile to decide it, and not many people knew how to trade it in line with ICT kind of concepts. So in this video, I'm going to be showing you exactly how I did that and how you can use it in the future. So this was obviously the trades here, and I'm going to pull up a completely blank GU chart so I can show you exactly how I traded it. So starting off, you do need a higher time frame bias. I'm not going to go too much into the higher time frame bias because I've got videos on my channel about that. So if you want to know how I find my higher time frame bias, then you can watch those videos. But very simply, so here we've got a CRT of this candle. So we want price to target this low, obviously after it swept this high. When we go down onto the daily, we can see really what's happening. I'm not going to take you all the way through the daily bias. I'm just going to keep it very simple. And as I said, if you don't know anything I talk about, then just watch a video on my channel about it. So you can see after we swept that high, we're breaking lows. So we broke lows. So we essentially want to break the low again. You can see we had the initial buy, which took liquidity, and then a leg down, retracement, leg, retracement. So we're waiting for that next leg is the move that we're trying to catch. So now we're going to mark on the current range and our internal external liquidity. So our internal liquidity, if you don't know what it is, again, just watch the videos I've got on them. But to keep it very simple, internal liquidity is just all the blocks and fair value gaps within the range. And external liquidity is just highs and lows of the current range. So, or the high and the low of the current range. Obviously, we're in a downtrend, so we're interested in only the external sell side liquidity. So now we can pretty much see that we are looking for price to trade down from this order block to this external low, and then eventually to this CRT low. So that's the general idea. And now I'm going to go back and show you how you could have used the volume profile all the way through until we get to today, where I'll show you the trade and how you could have caught the trade. So starting off, if we go back, you can see, so this is initially where we had the first sell-off from our point of interest. So this is where you'll be looking to start shifting your bias and actually start taking trades. So again, I'm not going to go into it, but this is the period where you don't really want to be taking trades. These distributions are the periods you actually want to be trading. So with that being said, let's draw on our fixed range volume profile. So you draw it from the high to the low, so from point A to point B. And as you can see, it's going to draw this on your chart. So let me explain what these points mean. So first of all, you're going to get a line. Now this line is where the most volume of any point in price was. So where there was the most volume expended, and it will draw a line. And then these little chart areas here, you see, is essentially the same thing. It's just indicating the volume at each different point in price. Obviously, the greater the candle, the more volume there was. And notice how it shows you buyers and sellers as well. So now we've got this drawn on our chart, we can see that the most of the volume was expended at this point here, around about this sort of area, this region here. So we essentially want price to return back to that area. Now there's two main reasons why we want price to return to that area. First of all is that we know price or the market is happy trading within those areas. So you can see here, the market doesn't really stay trading within these areas because there's no volume. Whereas here you can see price is happy and willing to be traded around this area. As there's a lot of volume, we can see evidence that people are willing to get in the market at this point. And the other reason is obviously sort of the same thing, but that means that there is going to be a lot of untapped orders there. So obviously we can see there's a lot of buyers, a lot of sellers. So there's going to be a lot of sell limits, a lot of buy limits, etc., etc. What people would really call liquidity, or what ICT traders, I suppose, would call a form of liquidity. So essentially what you're looking for is price to return to this area and then sell off. And as you can see, that is pretty much what happened. Now you sort of know how to use it in general. We're going to break down really how how to actually trade using it. So the London session is what we're going to be doing because I mainly trade the London session. So here you can see, so the grand scheme of the market is we're coming down. We've had that initial leg. After the leg, we've then traded into our area of quite high volume, and we've now had that sell off. So remember, you want to not get in before this move because it's a bit too risky. You want to follow this move along. So we want to follow and see where is the volume coming from. So we're going to do it from point A to point B, so the actual distribution from the high to the low. And we can see here now that majority of the volume was used up at 2 points here and here, right? We can see this from looking at the bars on the left here, and you can see the greatest point was here. So this is the point where there was the most volume expended. And notice is often going to be around a point where there was consolidation, because obviously it just makes sense. That means there's a battle between the buyers and sellers in that area. So essentially now we've got that, we have our point for re-entry. So you would draw, you want to trade this in line with the concepts you're already sort of trading, and this video is more tended to people that are trading ICT and those type of concepts. So again, you'd see that as your order block, and then you'd look to take sells off of there, and as you can see, did end up playing very nicely. So let's go ahead and move on into today. So now you're sort of hopefully getting a gist of how we're trading the volume in line with the ICT concepts and stuff you're already doing. So again, we'll go on, and what this is really good for as well is basically knowing, I forgot to mention this earlier, but knowing when we sweep the low, if we're going to reverse or if we're not. So a lot of people don't know whether to look for when the Asia low gets swept, buys up to the high, or if they should look for continuation moves. So this is really going to help you with that if that's something you struggle with when you trade in the London session. So now we're going into the next day. So right here it is 1 o'clock. So this is pretty much where most of us are going to be going to sleep. So we would have done our analysis for the day, and this is the analysis that I will be doing. So, and this is the analysis I did do in order to catch the trade. So we're going to do the whole daily distribution. So from the high to the low, and we're going to see where the most volume was spent. So again, we're getting some really nice things from this. It tells us a few things. So for a start, we can see the highest volume was obviously here, and mainly just this region in general here. Price was very happy trading within it. You can see there's evidence of that. If we just highlight this area, you can see price was up and down in this area quite a bit. So again, this is the area that we're looking for price to come back to, and then have a movement off of in our desired direction. You can see up here, it gives us really nice confluence as well, because normally when we trade in the London session, we're looking for some type of liquidity to get taken. So the fact that there's no volume above here tells us I'm not really looking for the New York high to be swept in tomorrow's open. So a lot of the time you'll be looking for the New York open, New York high to be swept as your liquidity and then a move. In this instance, you're not really going to be looking at that because we can see there's very little volume and there's not really any reason for price to come back up here because there's not really much participation in the grand scheme of things. We know all the volume's coming from around here. So again, you can pick out your order block from this level or just monitor this level really in general. And then what I also did was the last distribution from the last session, which obviously was the New York session. And you can see it was really giving the exact same picture as the entire day. So we know there's a lot of volume along this point. So essentially what we're looking for is we're looking for price to return to this area and then have a sell-off. So again, gives us nice confirmation that we shouldn't really return to above that. And even more so, that we shouldn't really now return, because a lot of people, if you actually hide the drawings, a lot of people may be seeing this as equal highs and a fair value gap up here to return to then sell off. But again, if you're just tracking the volume and tracking where people are actually deciding to step into the market, we shouldn't really need to trade up to that. And again, that's just using concepts you're probably already trading, but just using volume to really have evidence behind it. And the reason why it is so good to use the volume profile is because it's completely different to ICT concepts. So you're getting a really fresh view of it because you're going to mark all your order blocks, fair value gaps, or equal highs, equal lows, whatever it may be. And then the volume profile with something completely unrelated. That's just going to give you a fresh view essentially of if what you're looking at is in line with it or if it isn't. So with that being said, let's go ahead and play out the Asia session and see what happened, and then we'll come back at 7 a.m, which is where I actually start to trade. So let's play it out. Alright, so right here you can see it's 7 a.m, and this is when we're actually stepping into the market ready to trade. So first things first that we can see, during the Asia session we clearly got price to mitigate that sort of area of high volume that we was looking for, and then provide that next sell-off. So we already know what's going on. Again, when some people may be looking, I don't know, this is a liquidity grab of the prior day low to then move higher, we really know what's going on. We know it's a continuation of that bearish pressure after we return to this point. And of course, you can obviously mark on your points and say it was this specific order block here, if that helps you understand it. But I'll for now just leave it blank and leave it like that. And this is a good example, right? Because our Asia session's finished now, so people are going to be looking to buy up to the Asia high. So this is really going to help, again, like I said, if you don't know whether to look for buyers after we sweep or whether to look for continuation sells, and also where to look for sells. Should it be up here, this one here? Should it be before that? Where should it be specifically? And this is really going to help. So once we've got our Asia session printed, we're going to do the exact same thing and draw our tool. By the way, if you want to find this tool, it's where your long and short thing is here. And then you just come down to fixed range volume profile. And here, again, we can see some very interesting things. We can see majority of the volume, in fact, pretty much all of the volume was expended during this part here. So again, it's during a time of consolidation. We can see there's consolidation there. And then eventually we get that other move down. Now, why is this going to help us? Well, we can see we're ideally looking to take a trade in this sort of area here. This area here. Whereas, a lot of the time, other concepts may fail you, like the OTE, for example, where you're going to be looking for price to come up to the OTE. So you can look for a fair value gap there, for example, or premium and discount, for example, where you're going to be looking for the most optimal fair value gap, which is all the way up here, for example, and you're gonna go wrong. So this tells us that we shouldn't really worry about price reversing, because there wasn't a lot of volume in this here. In fact, there was very, very little. So that tells us that price isn't really interested in reversing significantly. And it also tells us that price shouldn't really come any higher. And also we shouldn't sweep the Asia high. So there's no need to sweep the Asia high because there's no volume up here. There's no participation there. And price isn't going to be attracted to that region. Remember, price is attracted to regions of high volume. Areas of low volume, it trades through very easily and it doesn't really get attracted back to that point. So with that in mind, this is our area here that we are going to be looking for sells from. So if we go back, you can see at this point here, we start to get a rejection from our point of volume. Okay. And again, if you look to the left, you can mark out your fair value gap that we actually did end up reacting off of. But the main point, and also, by the way, just above the daily true open. But the main thing we're looking at in this video is it was the area of volume, again, that we was looking for price to react to. So this is where I actually took my entry this morning. And of course, I do go live every day for the London session on YouTube. So you can tune in at 8 a.m. every day and watch me do this stuff live. And all my videos do get re-uploaded, so you can go back and watch the stream and watch me catch it live with you, man. But let's actually just break it down here quickly. So you can see we came into our fair value gap and our area of high volume. So all we do now is pick out our entry. So I went for this order block here, most premium order block there. I'm not going to bother doing the volume indicator on this because it's too short of a time span. It's literally like 10 minutes. It's not really how you want to use it. You want to use it a bit higher than that. Exactly how I've used it in this video. 1, 2, 3, 4 times. This is exactly how you want to use it. So you got 4 examples here of how it can be used. So that was essentially it. That was my entry. We had the entry on here and it was a 5 pip stop loss. Sorry, my bad. It was a 3 pip stop loss. 3 pip stop loss, and the TP was on the low like that. And yeah, very, very textbook trade, to be honest. But But nice, because I know without the volume indicator, not a lot of people would be so confident into taking this sell right here. In fact, I think a lot of people would be rather looking for the fact we had that sweep. They probably would have seen a sweep, maybe a break, maybe a break of these highs, a fair value gap there. So they're looking to go long up to the high, right? But when the volume's there, it tells a lot of the good stories. And remember, people, we should breeze through these levels. We should breeze through these levels. This is where all of our profit lies, right? All of our TP essentially lies in this region here of low volume. This is good because price should just cut through it like butter. It shouldn't want to see like these. We want to return from it. It's hard to escape because it's consolidate. Price is returning to it as we have done here, as we wanted it to. Whereas these bits should just really be moved past really smoothly. So yeah, that was the trade. I believe we got tapped in at about 8:05. My bad. It was about 9 o'clock. Yeah, so we got tapped in just before 9 o'clock. I think this was, yeah, it was 8:05 when we actually tapped into our level. And then, yeah, I'll just go on the 5 minutes so you can see it play out. See, as soon as we re-hit into that area of volume, price just consistently gave nice reactions, and even now to now it's given good reactions. And you can see that if I just draw out this line here, just how much this had a nice impact on price. And all that was by doing, there was no prediction there. All we're doing is drawing the Asia high, Asia low, and then the distribution and seeing where is the biggest point. So if we get rid of this now, you can see really helped us having this point that we knew was a volatile point in price. So yeah, and that's how we caught the trade. And then also for your own knowledge, we had pretty much the exact same thing on EU as well. So I won't go over everything over it with you, but you can see same thing with EU. We had the last New York session distribution yesterday, gave an area of pretty high volume. Asia session then tapped into it and had a distribution down. So we did the exact same thing from the high to the low, which told us that this was a point of high volume where this consolidation was very similar to the pound. And then yeah, similarly we got the reaction. We tapped into it. If you go down on the 1 minute time frame, I'll get rid of this so you can see it a bit clearer. After we tapped into our area of high volume, we had that nice reaction, the order block on the 1 minute entry TP there. So yeah, very nice trade. So for your own learning, go back and have a look at it on EU and just see that happening in real time. And yeah, hopefully you learn something from this video, and hopefully it makes your trading a little bit more powerful if you're trading ICT or CRT, SMC, any of that type of stuff, supply and demand, whatever it is. This should improve the way you trade. Again, just look at it. Look at that level, the amount of volatility it provided. EU, the amount of volatility this level provided. Very nice. Again, this is reused, by the way. So this was the initial move, was caught there. And then again, I've just drawn it back on. So that was the initial trade. And then in hindsight, I've drawn it back on to again get my level. And if we wanted to try and attempt to trade it again, you can see from the high to the low, this is where my most volume is. And again, if we zoom in, if we look at the bars, we see it's in this sort of general area here is where we want to look for it, because this is where the bars are the highest, specifically these two, but really all of them. And we want to look for what type of price action, what is there really within that tells us we should tap into it. And you can use obviously your order block, your unmitigated wick, whatever you want to do, however you want to trade. And then yeah, you would have taken your trade off of that. Would have looked something like this, would have looked something like that, your TP down there. So you can see it is very powerful of a tool that you can use. Again, you do need to have a pretty decent higher time frame bias with it. It can help you with finding your higher time frame bias, but the backbone to any good trading strategy is having a bias. And bias is very simple, people. So go watch it on my channel. I've got videos on how to find a daily bias. So then you have the daily bias. I've also got videos on my specific strategy, how I approach the London session, and then adding in this volume indicator with, or not indicator, tool with it. It's gonna really benefit your trading. So I appreciate you watching, people, and I'll catch you in the next video.